All right, let's talk Amtech Systems. They just dropped their Q4 earnings, and folks, the market's reaction was, well, let's just say it was loud and clear. We're going to break down exactly what happened, what it all means, and where we think the stock is heading next. And this is what I mean by loud and clear. A nearly 18% pop in the stock the day after the announcement. That's not just a little bump. That's a massive vote of confidence from investors. It screams that something fundamental has changed. So what on earth do they see?
So let's get right into it. The headline here is the beat. They didn't just squeak by expectations. They delivered strong results against what were, frankly, some pretty soft comparisons.
And when I say beat, I mean they absolutely crushed it. Wall Street was expecting the company to lose about 3 cents a share. Instead, Amtech came in and posted a profit of 10 cents. That's a huge swing. Same story with revenue. They brought in nearly $20 million, way ahead of the $17.75 million everyone was looking for.
Okay, now here is where the story gets really interesting. You might be looking at this and thinking, wait a second, their revenue was actually down from last year? And you'd be right. It was down over 17%. So what gives? How on earth does a company impress the market so much when its top line is shrinking? Well, that's because there's a huge strategic shift happening under the hood.
It really is a full-blown turnaround story. Investors were willing to look right past that year-over-year revenue drop because management has built a new playbook. And it's based on 2 key pillars, a smart pivot into AI and running a much, much leaner operation. First up, that pivot. Amtech is diving headfirst into the AI boom. And this isn't just talk. Management was crystal clear that equipment for AI infrastructure now makes up over 30% of their key thermal processing segment. Think about that. This isn't some little side project. It's quickly becoming their main growth engine. And a second pillar, getting lean and mean. The old Amtech had 7 manufacturing sites. The new Amtech has 4. They're adopting a more nimble, semi-fabless model. And the bottom line of all that work, a cool $13 million in savings every single year. This gives them incredible operating leverage, meaning they just don't need massive sales anymore to be profitable. And what does all that discipline get you? A rock-solid balance sheet. They ended the quarter with almost $18 million in cash and, get this, 0 debt. That's like having a full war chest and no liabilities. It gives them so much flexibility to keep executing this new strategy. Okay, so that was the quarter that was. An incredible performance. But what about the path forward? Let's dig into management's guidance and, some of the risks that are still on the horizon. Management set a very clear checkpoint for the next quarter. They're guiding for revenue somewhere between $18 and $20 million. Now, what they're really saying with that is, hey, that great quarter we just posted, that wasn't a fluke. This is our new baseline. But it's not all perfectly smooth sailing. There is one key risk we've got to keep on our radar. The CFO resigned right at the end of the year. Now, they're managing the transition well, but a change in a key C-suite position always introduces a little bit of uncertainty. It's definitely something to watch. And the CEO was pretty upfront about this, too. Their legacy business, the stuff they sell into the industrial and automotive markets, is still soft. So right now, you have this fantastic AI growth that's offsetting the weakness elsewhere. It's a bit of a balancing act, and one that investors need to monitor. But to really underscore their own confidence in this plan, the board just authorized a brand new $5 million share buyback. This is management putting its money where its mouth is. They're basically signaling to the market, we think our stock is a great value right here, and we're buying. So you take the AI pivot, the leaner operations, the solid guidance, and you weigh it against the risks. The real question is how all these pieces fit together. That brings us to the next call, our take on Amtech. And this leads us to the big question on everyone's mind, right? After that nearly 18% jump, did we miss the boat? Or is this rally just getting started? Here's our house view for the next quarter. We're predicting revenue will come in at the high end of their guidance, powered by that ongoing AI strength. For the stock itself, we think it'll probably consolidate these big gains for a bit, but with plenty of potential for more upside as the rest of the market catches on to this turnaround story. So, with all of that as the backdrop, we are initiating our coverage of Amtech Systems with an outperform rating. Our reasoning is pretty straightforward. First, they've proven this new, leaner model works. Second, that AI demand feels real and sustainable.
And third, the new buyback shows a clear focus on shareholder returns. We believe the market is just beginning to reevaluate this stock based on its durable profitability, not just its old cyclical patterns. This story has room to run. And of course, just a quick reminder, this presentation is for informational purposes only. It is not financial advice. You've always got to do your own research before making any investment decisions.